How's it going, everybody? This is Derek Quick with Count Fortune, and today we're talking about the 4 top penny stocks for the rest of this year. And these stocks, they're actually going to be in the uranium sector. If you don't know, uranium has, in the past week, Sprott has been buying up uranium. They're actually causing the price in the spot market to go up, and they're just going to continue to do this. They raise money in the markets and they buy up the little bit of spot uranium that's left. Now, these 4 stocks I'm going to be going over. I've got some presentations and I'm going to talk about the overall market in this, but please hit the like and subscribe button below. Some of these stocks I have not talked about yet. So the first stock I'm talking about is Mega Uranium, MGAFF ticker symbol. Now, this stock is a lot different than a lot of other uranium stocks. They are a company that holds a diversified uranium mining and investment company that holds a portfolio of not just a couple of pretty good mines there in Australia, but what's big about this company is they hold a massive amount of shares. We'll go here. Actually, this one I'll show you here. It's in NextGen. Okay, so NextGen, big uranium company. They've got the Arrow deposit, one of the biggest deposits, highest grade in the world. It will be coming on hopefully by the end of this bull market, but there's 19 million shares that they have. Now, what's crazy about this, and that's why I went over here, that is actually about 4.5%, sorry, 4.3% down here of 4.13 of NextGen that they actually own. So the market cap of this, this was not too long ago, but when it was about almost $5, it was close to 100 million. So as we can see here, if we go back, their market cap, they're top here. Their market cap is close to right now. Like I said, it's gone down a little bit the past month, but they are at, it looks like 64 million market cap. And what's crazy about this is this stock, if you see here, back in the previous bull market, actually ran up to over $10, the highest peak. So from this price today, this isn't from the low, it could still go up 6,900%, 69x, if we get somewhat prices like we got last time, which I think we will. But the other thing is the company holds 460 million shares of Toro. They also hold Uranium Royalty Corp and also International Consolidated Uranium, about 1.7 million shares. So if we go back here to this chart, you'll see that the holdings of Toro is about 12%. And then what I also like about this stock, and it's one of my check marks for uranium stocks, especially mining stock, does the management have good skin in the game? So the CEO president, he has close to more than anyone, which is 4.5%, 15 million shares, really big part of owning the company. So he wants the stock to go up. The stock's trading at 15 cents. This is kind of insane, given the fact that we're going to have this squeeze. They've got a lot of shares of a massive uranium company. They do have a good upside, not just there, but also in the other holdings they have, the properties they have. And I think this will go back to $10, like in this chart here, my uranium sheet, which has them about, I have them about 1.9 times the amount of shares that they had previously. So 2 times the shares, which is insane for what it's trading at right now. The market cap is so small still. And the other reason you might ask, okay, why do you have this? I made this Wall Street Bets uranium version because I believe that when uranium gets over 100 and it starts to go to 200, we're going to have investors from the Wall Street Bets area, Reddit, these meme stock people that might want to trade not just for the squeeze, because uranium stocks squeeze up like crazy when the price of uranium goes up, but we're going to probably see them get in there. The volume's going to be crazy, and we're going to see this type of stock because it's named Mega Uranium. And in my theory, any stock that is named uranium is going to be easier for them to buy. I should actually change this. This actually is on, it's not on the New York Stock Exchange. It's actually on the OTC. I believe it's the QB. We'll say OTC. But the thing about this is why that, I'm glad I left that in there, because I forgot to talk about it in my previous one, but I think that this stock, as well as a couple of other stocks that aren't on the New York Stock Exchange, you know, the big boards, I think that they actually will uplist. And some of the stocks like Peninsula, they actually did tell me, the CEO said that they're working, and that's their goal, is to get on the New York Stock Exchange, you know, because they're on the OTC. Now, the thing is, these stocks, they are penny stock exempt, which means because they dual trade, these stocks are dual listed. You know, these are also on the Toronto Stock Exchange. So they actually are going to not be labeled as penny stocks. And if you know, if you follow me in the Discord, you've seen me talking about it. A lot of penny stocks, not any uranium penny stocks, but a lot of penny stocks are actually going to be delisted if they are not compliant soon. You're not going to be able to necessarily trade them on the OTC anymore. Now, these are usually pink sheets that do not report. So this is not one of them. So I'm glad I brought that up just so I can remember. I changed this. So if you want access to this sheet, just go to my Patreon and I'll have this as well as the uranium sheet here. So we can track all these stocks when uranium starts to really run. Now, the next thing, Anfield, is in the next stock I want to talk about. So this stock is a M&A company, mergers and acquisition company. They hold a lot of uranium uranium projects, as well as some vanadium. And then they also hold, which I'll talk about in a minute, the biggest, well, one of the biggest. There's only 3 in the United States, North America, but it's sorry, not the biggest. I said biggest, but it's the newest of the uranium mills. So some fast facts about the company. I like to show you guys this. They do have a big holding. Their CEO owns 3.3% as well. Or sorry, 3.33. And then David Bleak, he also owns, which director in the company, 3.37% of the company. So they have a good amount of shares in the company, which I think is phenomenal. When a company, it's like a small one like this, has a very small market cap, they're able to hold a lot of shares. They want the stock to go up. They did have they raised recently, which was really good. They had a capital raise and it was like over subscribed. So a lot of people wanted in on it. They got some warrants, but the stock where it's trading at right now, it's still very, very low. You know, the market cap's really low. I think we'll see here. I think the market cap right now, trading, I think it's about, let's see, I would say 25 million, 32 million, let's see, yeah, 32 million, which this is pulling Anldf, so that is in US dollars, I believe, but it does trade mainly on the Canadian Stock Exchange. I say mainly, but that's where they're out of. So, like I said, they have 1 of 3 US uranium mills in North America. It only ran for 6 months in the 1980s. They did talk to utility companies, and they want to secure uranium as a new junior producer. So path to production from utility companies, the CEO said that they have had these conversations. So I thought that was pretty cool for such a small, you know, market cap. Uranium 1 Charlie project is a fast path that they're looking to get into production. No other mill has been built since in North America because of the costs to permit these. It takes forever. So I think this will be an easy buyout and probably worth a lot more than it's worth right now. And I'll go into that in a minute. I think I've got it here in my notes. 34 assets, 9 of them in vanadium. The CEO is a finance guy. He's a former EV battery analyst. So that sector in vanadium is huge. So they're also looking into that because they've got a lot of vanadium as well. The board, Stephen Lunsford, he worked at Cameco. He did the feasibility study and lives there in Wyoming, where their Charlie project, ISR project, is located. They are a low market cap, and the stock price, you know, is really low. Like I said, they raised cash in September for their mergers and acquisitions. The $500K promotional cost they did spend last year, they are covered by Red Cloud, so it did help them get some funding. $60 uranium is what they said they want to get into production. It's only one of a few ISR projects, kind of like Peninsula, but they're not low pH. They think that the re-rate with the mill, and I do as well, probably 10 to 20x what the stock is trading at right now. If they got the mill in there rated, if it really was, you know, something a company, you know, say like Energy Fuels would want to buy. So the vanadium wasn't actually rated in there as well. Vanadium has been going up. It's for EV, the EV sector. These batteries, these high state, solid state batteries, has other assets as well as a gold project in Arizona, 4 royalties on projects from 3 other companies. So this is pretty big. They got 1 million pounds a year of production that they're pushing out for the mill that it can do. The mill has no liabilities for the environment. It's the youngest, like I said, of the mill. When uranium prices fell previously, that they were able to buy this for pennies on the dollar. I think Uranium One bought it for $100 million in 2007. Or sorry, U.S. Energy from Uranium One. So this mill is worth multiple times over their market cap. They said that it's in care and maintenance right now. It needs $25 to $30 million for a restart. I think they could partner, I said, with it. They are partnering right now with Orano. ISR in the low price environment, that Wyoming Charlie project is great. You know, it's going to help them get into production pretty quick because they have this deal with Orano to help them out with that. The Westlow properties in Colorado, they have 11 million pounds of uranium, 53 million pounds of vanadium, which has skyrocketed back in 2017. That was when China banned imports on vanadium. It ran 500% in a year. Recent gain of a few dollars they've had since. So the CEO has been talking about the restart as well. 370,000 pounds of U3O8 at the mill with a grade of 0.147. I think they said that it's an easy 18 plus year mill life. They raised, like I said, $3.7 million in September. ISR is the focus. The hard rock assets that they have are not right now. There's a, like I said, partnership with Uranium One. The G&A cost for the Westlow properties bonds they raised to cover, it cost $500,000. This is what they spent their money on. The wellfield work, permits, licensing, $2.5 million is what they'll need. And they raised that through the reclamation bonds to put up money they actually bought for those properties. So they are going to need to raise some money here. There's the Shootaring Canyon Mill. It's an overhead view of it. It's 48 miles south there in Utah from some other projects very close. I've already kind of touched on that, but it's nice to be able to actually see visually what the mill looks like. So this is also a picture of the mill, the background there. Like I said, very, very cheap right now. Canadian, it's 11.5 cents. So we've seen this pretty volatile right now with the uranium market. It's been going up and kind of down. The uranium market has, you know, we're seeing spot really start to squeeze the uranium price in the spot market. So I think this stock just has such a big upside because of it being such a low market cap. As you see here, pure market cap to resource multiple, they're so very low. UEX, this has changed. They've got more resources, so they're very right there with UEX. I'm going to talk about UEX in a little while in these slides. But like I said, I've got a bunch of slides here. If you want access to these slides, you can check out my Discord, like I said, Patreon. I've got all these slides. I talk more about it, but really right now I see this company getting into production if we see $60 uranium, because it's pretty fast track. They're already working with Orano, and I think that's big. One thing is when you have these low market cap stocks, you know, when uranium gets over $100, $200, you see these stocks move like crazy. They have a mill as well. So I think that's one thing that sets them apart from everyone else. So to me, Anfield, Anldf, very, very good buy right now, especially with uranium price going up. Next one is Denison. So this one I believe as well. I do have this stock listed as a meme stock possibly for the Wall Street bet, you know, people, because it is on the New York Stock Exchange, so they can buy it with Robinhood. Previously you saw that was not on there. The last two, they're not on the New York Stock Exchange yet, but they are dual listed. But you can buy Denison, you know, with Robinhood, smaller, you know, brokers. And I think this being at $1 today, you know, trading pre-market, I think it's still under $1. It's to me a very safe bet. You know, if you're a long-term investor, you're looking to invest in a uranium stock, I think this stock is good because they've added 50 million more pounds of U3O8 since last time I covered it, and it's still around $1. So it's easy to, you know, work the numbers. You know, I think this could easily go to $10 pretty quickly, you know, if uranium gets over $100 plus. So they own 15% or 15 million of Millennium. It's a major project owned by Cameco. It's in the works. 22.5% interest in the McClain Lake uranium mill, and that's 12% of the global uranium production. They also have 95% of the Wheeler River. It's the largest project in the Athabasca Basin. Their Phoenix ISR ISR project, combining the world's lowest cost uranium mining method with the world's highest grade undeveloped uranium deposit. So max of about 6 million pounds a year is possible. It's a low cost, 109 million pounds total, 14-year mine life. Phoenix is about a 10-year mine. They also have 16.9% in the Kikavik mine, 22 million pounds of U3O8 long-term, 50 million Canadian cash flow cutoff. They did have from that managing the UPC deal. Now they were the ones that used to manage UPC. Now Sprott's doing it, and Sprott's just moving the spot market like crazy. They didn't have as much pull, and you know they just had too much to do. Now they have a lot of other projects. I won't really talk too much about those. There's just too many to talk about, but these are some of the big ones. They have the best exposure, I think, to U.S. market prices, as new investors are likely to buy this stock. This stock had hundreds of millions traded when it ran. So hundreds of millions of shares were traded. I think it was for 2 days it ran, and it was the top leader in the market, in the whole stock market, not just uranium. So they have 280,000 hectares of prospective exploration as well. So this is the best area in the world to mine uranium, and they have some of the best projects that they got recently. Percentage of JCU that they had bought up with UEX has the other 50%, but they have some of the best future projects. So like I said, this stock right now, the market cap is pretty low, you know, 800 million around that market cap, 800 million shares outstanding. The market cap here, we look at market cap for Denison, it's about 829 million. Now this is the thing, before I was talking about Anfield, they didn't participate in the last uranium bull market, but Denison did. So Denison, they have about 4 times the amount of shares they did now. So if they ran to what they did last time, they're looking at a 4,000% run that they could do, but because of the market cap, I don't think that's necessarily going to happen unless we see crazy prices because of the amount of shares they have. We could see Anfield do that though. They do have 8 times the amount of shares that they had in 2010 when uranium had a little run. But the problem with that, or not the problem, but the thing is they did not participate in the last uranium bull market. So Denison, I think it's an easy 10x, you know, easily 1,000%. But you never know. If uranium does get to 200, we could see these numbers. So Denison and Anfield, definitely on my radar to be buying some more. And they also did, like I said, they did lose a little bit of money from that UPC deal that now Sprott has. They do have some good, pretty big operating expenses for the care and maintenance of these mines. But if we see that price jump over $50 in spot, they might start to get some of these projects going, and there's less care and maintenance once they get this stuff going. And I think that this stock is, like I said, very big potential for it to be a meme stock in uranium. And I think that is a whole investment in itself. And I might be swinging in these stocks that are, you know, in the meme sector. I might not hold them as long. I might just recycle, you know, swing them and buy back in, you know, once the volatility just continues to go up and down. You know, those are the best times to trade that. Very tough to trade, but that is one of my plans for these. I don't necessarily believe this is going to be a meme stock. It is on the OTC QB, like I mentioned earlier, but they did get the 50% or 50,000 pounds, 50 million pounds of U3O8 that Denison got, these same projects. So they are now the 3rd largest junior resource holder in the Athabasca Basin, which is the biggest, highest grade uranium in the world. They're right there with right behind Denison. And NextGen is the one I told you about earlier, the Arrow deposit. That's who Mega Uranium has a bunch of shares in. So this is big. You know, they've just expanded their uranium, their projects, and it's still trading about this right now, about 30 cents Canadian, 20 something cents US. Now we'll look real quick with this stock. Previously, this stock did run. Previously, they have about, I think I said 2.5 times the amount of shares. So the market cap, then they actually ran this stock up to $9.50. So even from today, we could run 3,800% if we see those $100 plus uranium. $200 uranium, you never know. This could go higher. Like if Dogecoin can reach the prices that it reached, and it's a joke. You know, these companies with hundreds of millions of pounds of uranium, with uranium prices going up to 200, the stocks are going to be valued at billions and billions of dollars. Now, as you see in all the charts here, we've had a good correction in the past, month or so in uranium, couple months, but they're still up big. This is back at their March lows of 2020. Now, I'm not talking about these stocks below just yet. These are still up big, but I really want to get in still low. And I want to get in with a lower market cap, 32 million, 64 million, even 127 million. That's really low for where this stock could go. And UEX is a big possibility to not only be a big explorer that finds another deposit like this Phoenix deposit, which is look at the grade up there. It's one of the highest in the world. It is the highest. And what's crazy about it is they're very close to where all these other mines are, some of the biggest in the world. Phoenix, and then Arrow is one of the largest new discovered mines that we're talking about from NextGen. As you see how big it is here. And the thing is, they've got 3 of the 6 tier 1 deposits. So these are the high end deposits. This Phoenix, Millennium, they own a percentage in them, so they're not liable for everything, which is good when you're a junior uranium company. And 3 of the 4 tier 2 projects as well. So that's them, as you see these dark blue with their symbol there. So this is a big upside. They have a huge pipeline from these grassroots, projects where they're looking to really explore and find the next big project, to development projects all the way through. So if you're looking to be exposed to a wide range of projects, they completed the deal. They got the financing by Sprott. They got, Sprott to give them the money they needed. Sprott has 73 million shares now. So, Sprott wants the stock to go up. And why not have, a big, supporter like Sprott in your corner? Yeah, they might sell some shares eventually, but they want the stock to go up. They know where this is going, and I don't think they're going to sell out. And the thing is, the management they're very good geologists. Now, sometimes some people might think they might be lacking in some areas, and I'll talk about them in a second, but they work for Cameco. A couple of them work for Cameco for years, and they found hundreds of millions of pounds of projects out there. 275 million pounds of U3O8 they've discovered. So this is a map. Like I said, this is some of the best areas in the world, and these are some of the projects that they added. 90% Denison, 10% JCU. So they split this in half. 5% goes to UEX and 5% went to Denison. So 95% now. This is Willow River. These are great projects. This is ISR project. These are great projects in the future that will make them a lot of money. And when you just hold a percentage of them, when say Denison or say Cameco, their stock goes up a bunch, even if UEX doesn't go up, remember they hold a percentage of those assets. So the market's going to see that, and the stock should go up, and with the $100 million market cap, I see this as $1 billion company when uranium goes over 100. When it goes over 200, this could be a $5 billion company. NextGen right now is multiple $1 billion company, and they have the Arrow deposit. And some people say that Arrow deposit, they don't even think that it's going to the Arrow deposit, they don't even think it's going to get up during come to fruition during this uranium bull market. I think it could, but we'll see. So the management, some people, like I said, they got angry that they talked about this deal, and then Denison came in and outbid them. But they ended up splitting it. Like I said, they were definitely going to get it, I believed, and they ended up splitting the deal in half. I think long term it's good. Kept the price low, and hey, now you get to get in, or whoever else, if they like this stock, they get to get in a little bit cheaper, pretty cheap. You know, I was going to buy more if it had gone up, and now I had the opportunity to buy even more with it being such a low market cap. And like I said, I think that they've got a massive pipeline, and they also have cobalt. That's another thing for EVs. Zinc, copper, diamond deposits, all these things could be on their property. Definitely cobalt there in the Athabasca Basin. So great team. They work for Cameco. Could this be a buyout? Could Cameco buy them out? You never know. During the previous bull market in uranium, there were hundreds and hundreds of uranium companies, and most of them were bought out, did mergers. They delisted once uranium price went down. But majority of them, it wasn't just them being delisted. It was because a lot of these companies actually, got bought out or merged. And UEX is definitely a big one that could do that, as well as some of the other smaller ones I talked about, Anfield and Mega Uranium. UEX is definitely a big upside in my opinion. Now, if you look here, we're looking at right now the Dow's actually up 0.7% pre-market, but uranium stocks, this is in the ASX. This was what they closed at. So uranium stocks, look at the volatility. Bannerman 12.5%, Deep Yellow 11.8%, Lotus, Peninsula, 10%, 11%, Manhattan, Toro, Boss. These stocks are very volatile. So they're up big. So today we're probably going to see, right now we're at Denison, it's actually up 4 cents. So yeah, we're over $1 again. It closed, what it was, $1.03. So yeah, we're over $1 again. So that's, that stock is one of the four that I was talking about. We'll see where this goes. Excuse me. But with Sprott, what are we going to see? Are they going to be able to buy more uranium today? Once they actually are able to purchase that uranium, then they're able to raise more, as long as, they can continue to raise money, and I think they will. I think a correction, I actually said in my previous video, in the next few months that they're going to look at the US listing, but it's probably going, now they do a little more looking into it. They actually, I think, just put their paperwork in. So it's going to take a lot longer. So it'll probably be first quarter of next year before they get the New York Stock Exchange listing. But there is an OTC listing if you want to get into this, buying Sprott Physical Uranium Trust. But the main way this trades is the Toronto Stock Exchange, U.U and U.UN, and the TSX. So, we're going to see a massive upside in uranium if Sprott continues to push the uranium market, in the spot market, that price up. And like I said, I think that we'll probably see $40 plus uranium by the end of this year, maybe more. If we get $40 uranium, $45 uranium, and this starts to become mainstream, they're starting to talk about this, on the big, on Bloomberg, and they're actually starting to get this out there, word to the Reddit crew. We could see a run in these stocks before, I'm talking about a big run, before uranium even hits the $100 mark. And then if we see the $100 mark, there's no telling where these could go. Paladin 1 cent to, $9+ plus, 100,000% run. Could that be in the future for some of these smaller market cap uranium stocks? I believe so. I believe that, some of them are 25 million market cap. So obviously they're 25 times bigger than that 1 million, but there are new uranium stocks out there coming in, onto the markets. And because these stocks are a lot better now than they were back then, I think they have a bigger upside in some ways. Back then, Sprott was not buying in the uranium spot market. It was not like the amount of volume that we have in the Dow now, in these stocks. These stocks are seeing a lot of volume, and, Denison had record volume. The whole market, beat the whole market. The most volume of any stock during February. So during 2 of those days, trading days. So we don't know what we could see with volume coming in. with the price going up. And one last thing I think about this is, you know, with all of these new projects coming in, these, you know, uranium projects that these companies have compared to what they had last time, it just leaves such a bigger upside. Like if you look at something like Paladin, they got into production, uranium producing at the very end, the peak of the bull market, meaning the price of uranium there in 2007 and the price of the stock peaked. That was right when they came into production. So you got to time this right. You want to time it once pretty much things start up. You know, in the uranium bull market, if we continue to push the price higher and higher, we'll see a longer bull market, but we still got to be cautious. It's a very volatile market. Don't just buy into these stocks. This is not financial advice. I'm just letting you know, I like to find stocks that are very early, that have not ran, you know, pretty big yet. And I like to see where the future can go. With uranium stocks, we could see some of the biggest runs in the stock market and the biggest gains we've seen in a long time in these uranium stocks are coming. So hit that like and subscribe button below and let me know, do you think these 4 stocks are pretty good? If not, what are you invested in right now? Maybe I'll do some videos on it. Starting to make a lot more videos now. So anyways, until next time.